We've looked at property, plant, and equipment. We've looked at acquiring it, post acquisition costs. We've depreciated it. We've disposed of it. We've changed our estimates. And now we're going to look at how it appears on the financial statements and which financial statements you should look at to determine answers to certain questions. So this is Alphabet or Google, and as you can see, this is their income statement, and nowhere under costs and expenses do you see the term depreciation expense. But you do see research and development, so you can see that you're expensing your R&D costs, that they're spending internally to generate new innovation and things that are leading the way, so to speak, for Alphabet. Where depreciation is buried is in this cost of revenues. So we'll need to go to the footnote to find out more about depreciation or another statement. Here's the balance sheet, and as you can see, property, plant, and equipment, it shows net, which means it's the cost minus the accumulated depreciation, and it's increasing. And we also see that our intangibles are also net, which means we're amortizing them, and there's some amortization expense associated with them. And then there's goodwill, which, remember, we don't amortize, but we evaluate annually for impairment. So that's what you find on the balance sheet. On the statement of cash flows, it's a little bit more insightful because they have to tell you how much depreciation and amortization the company took that year. So this is the fast and easy way to find the depreciation expense or the amortization expense for the year. It's also under investing the easy way to find out how much did you spend to acquire property, plant, and equipment, and how much did you get when you disposed of property, plant, and equipment during the year. So remember, our non-current asset analyses are always in our investing section. So that's statement of cash flows is very helpful. Here's some of the questions that could be asked, and I've done it for multiple years just so you can see what we call true financial analysis, which means you look at more than just 2 years. You look at 5 years or more to see if there are trends. So the question here is, what percentage of total assets do property, plant, and equipment and long-lived assets in total make up? So what you do is you take those non-current assets, which is what this is, over total assets. As you can see, they're a growing percentage or growing proportion of our total assets. So they're growing. So if you look at this, what in particular is growing the fastest, you would say, well, that's property, plant, equipment net, because just by eyeballing it, it's growing pretty quick. If I just look at property, plant, and equipment over total assets, it too is growing. These are a few more years back, and as you can see, each year the percentage of total assets taken up by property, plant, and equipment or non-current assets continues to increase. So the structure of my balance sheet is changing, and I can see that just by looking at these proportionality of non-current assets or property, plant, and equipment as a percentage of total. What are some of the disclosures that you'll find, and from that, can I tell what the largest category of property, plant, and equipment is? Yes, you can. So if you go to your footnotes, footnote 1 has to tell you what property, plant, and equipment major categories are. And in this case, for Alphabet, it's land and buildings, IT, assets, construction in progress, leasehold improvements, which are things that you do to your capital leases and furniture and fixtures. It also has to tell you what depreciation method, and they use straight line over estimated useful lives of their assets. They also tell you about what their useful lives are. So, as you can see, looking at property, plant, and equipment between 2017 and 2018, it used to be, you can see that there is kind of a tie going on between land and buildings and IT assets, which would be the servers, that they're a big chunk of property, plant, and equipment. Notice they also have to tell you about their capital leases that are included. Okay. This is going back even further. Notice when you go back further that servers, their IT assets were a greater proportion, and over the last few years, land and building have caught up in terms of how much is spent on land and building versus IT assets. Notice we also have construction in progress. That means they're building buildings or facilities, and they're not yet in operation, so they're collecting the costs, including those interim construction in financing costs, so that when those buildings or facilities come online, that construction in progress will become part of land and buildings. So you can see it's growing. Another question you could ask is, how large is the depreciation and or amortization expense as it relates to sales, and why is it listed on the statement of cash flows? Well, we know it's on the statement of cash flows because we use the indirect method, and the indirect method says we have to add back our non-cash expenses or revenue items in order to convert accrual net income into net cash provided from operating activities. So as you can see, our depreciation and our amortization for those years stay around 6-ish%, 6 to 7% of total revenue. If I go back even further, you can see that in this case, the depreciation and the amortization, and here I just used the depreciation and didn't include the amortization, but it too is around 6 to 7% if I include both of them. How much did Google invest in property, plant, and equipment? Well, we know we go to the investing section to find that, where we can find the purchases of property, plant, and equipment and the proceeds from the disposal of property, plant, and equipment. And this is 2016 through 2018. And then here are some of the footnotes to answer the question, what's the largest intangible asset? And the largest intangible asset is goodwill by a lot. But if I want to look specific, and here's the detail about goodwill and the reconciliation from 2016 to the end of 2018 through the acquisitions. And notice Google is involved there. If I want to look at specifics about our intangibles, I can see that intangible assets net are made up of patents and developed technology, customer relations, trade names, and other. And again, I can see that it dropped, and it dropped because of the amortization of my intangibles, my amortization expense. So, looking back even further, what's the largest intangible asset? I can see that it, in this case, is patents and developed technology, but really, when we look at all of them, it's goodwill. And remember, goodwill arises because one company is acquiring another company and paying more than the underlying assets, because you're buying not just tangible assets, but intangibles as well. Value, perceived value.